Hello, everyone, and welcome to our February Mortgage and Market Update. I'm joined, as always, by Nicole Ruth of Fairway Independent Mortgage. Nicole, how is your day going so far?
So far, it's good. So far, it's a little crazy.
Yes, we are all crazy busy.
It's like Monday, take two.
Monday, exactly. I mean, why call it Tuesday? It's Monday, take two,
Especially after a holiday. It totally is.
Well, exactly.
Bank funding day.
So
Yes.
I want to dive in because you and I were just talking something that was super interesting to me.
Yeah.
Small business confidence is down right now.
Yeah.
What does that mean, and what are the repercussions of that?
So it's interesting, right? So manufacturing and consumer confidence is slightly down, but they're just like hovering. They're waiting. It's like this pent up demand. Consumers want to go out and be normal again, whatever normal will be in this new world. And they've got money. Savings is up. And so with the savings rate being up, and I've had a lot of conversations about that too, because people are like, how can savings be up when the stimulus package went to those in need? When we had people that couldn't afford to go to the grocery store and have lost their jobs. But we have to remember there's a lot of 20 and 30-year-olds that might make under the income limit that got stimulus money and have jobs, right? So those guys are funding the stock market right now, and they're doing pretty good, shockingly. So savings is actually up. We have an estimated 1.5 trillion right now in savings ready to spend. But here's the sad part. The small businesses aren't feeling it yet. The small businesses are barely hanging on. If anything, we have to support our small businesses as much as we can, because if we're spending money, the yous and me's, we're probably staying at home and we're doing it on Amazon and we're doing it online. And those small local businesses need us to come back.
Yeah, absolutely. Which is tough because so many people are still worried about, obviously, COVID. It's been almost a year now. I can't believe I'm actually saying that. And so I think slowly but surely, hopefully people will get back out there and keep supporting those small businesses. But speaking of a year that it's almost been since the start of COVID here in Colorado, I'm really seeing on my side a lot of buyer fatigue. It's been almost a year of these historically low interest rates. So the buyer pool's just been massive getting out there. And a lot of the home buyers in the smaller price points, maybe 500 and under, are having such a hard time getting into properties, which stinks. I mean, there's multiple offers on these properties going well over asking. What can we tell buyers out there today who are looking forward to getting into a home in the first quarter, second quarter of this year from the mortgage side? Like what can you as mortgage lenders do to help them get into a home?
So the first thing I'd try to remind buyers, and if you're a buyer and you're watching this, I'd say, I know your pain. Right. I mean, I have buyers that I've helped put in 6, 8, 12 offers and not get it and be overtaken by cash or extreme appraisal gaps. So all of those things get frustrating and they make you want to just give up and just continue renting. But don't do it. Please put in the 8th offer, the 9th offer, the 10th offer. Hang in there, because you renting for another year is only going to put you that much further behind, and you're building your own wealth. Plus interest rates, we know for a fact, are going to be higher in a year. And when that happens, that home is going to cost you more. We already know appreciation's continuing. And so overall, you're going to lose the opportunity. Meanwhile, you're funding your landlord's retirement, right? So that doesn't necessarily help you. That just kind of says the opportunity cost is huge. What I would say is try to be creative. Work with your agent to go, what can I throw in, right? Can I do a quick closing? Am I working with a lender that can do a closing in 3 weeks? Can I do any money over asking? Do I have some money that maybe, especially like a veteran with no money down or a first time home buyer, instead of putting 3% down, can I come in with 10% down, but maybe I could do some appraisal gap. And if the appraisal comes in strong, which a lot of them are, then maybe I can put that towards more money down and use that same money a little bit creatively. Right? Or maybe rent back, especially if you have a seller who's looking to buy a new build. Maybe they need an extended closing with an extended rent back after that. How flexible are you? Can you rent month to month and give that seller some flexibility? So I would say talk to your lender first. Figure out how creative you can be in your loan side with the money you have. Then, Marybeth, there's I know I talked on a little bit about them, but there are some other ways as well on the real estate side you can get creative.
Absolutely. And you mentioned a lot of it, but something else that I'm actually talking to buyers about this year in 2021 is, yes, rates are historically low, which means you have more bang for your buck and you can buy a home maybe at a higher price point. But why don't we actually take a look at maybe a lower price point? For example, if you can afford a $500,000 home on your loan, let's look in the four. Let's look at in the low fours to mid fours, because of that multiple offer situation. You're going to need to be able to possibly bring more money to the table. Just like you said, Nicole, you probably will have to go over asking. You might have to provide an appraisal bridge gap. And from what we talked about, from everybody saving money in 2020 by not traveling, stuff like that, that maybe you have those savings there in the bank that you can bring a super competitive offer. You can also put down double the earnest money. There are little tricks here and there that I, as the agent, can definitely help make your offer really strong. I mean, and first and foremost is communication with the other side, is communication with the listing agent to figure out, hey, we love your house. We're going to write an offer on this listing. What do the sellers want? Just like you said, do they need a rent back situation? Are they looking for a buyer to waive inspection? Are they looking for maybe a huge appraisal bridge coverage? Just getting that little information here and there, so I can then in turn talk to my buyer and craft that offer so they're comfortable, and yet we come back and be the winning offer, and getting it in as soon as possible. I think also timing is key. As soon as that home hits the market, get out there and look at it, because everybody else will be looking at it too. So definitely a lot going on. And speaking of homes hitting the market, I have a new listing hitting the market tomorrow, but I was just pulling some numbers from RE Colorado, our local MLS. And I typed in the city, Denver, and just active listings. Single family homes in the city of Denver, there's only 197 active listings as of 2 p.m. today.
Right.
And of that 197 active listings as of today, only 46 are below $500,000. That's 46 in the entire city of Denver below $500,000. Those numbers aren't good. I mean, we need more inventory. So I'll be putting a listing on the market tomorrow in the city of Denver, to be honest. So there we go. But that price point will be $575. So a little bit over 500, but at the same time, gosh, I mean, those numbers are just astounding, aren't they?
It's scary, right? I was thinking about this the other day. So we have, obviously the news is carrying this record low inventory, and it's an inventory crisis, if you will. But if I looked at 2020, when we had extremely low inventory, we also had a record number of sales. So we had inventory. It just went on and off the market very quickly, which
Right.
is, to your point, you've got to be ready. You've got to be working with your agent. They might even have to get in front of you and go do a showing on that home, and using their camera or using some sort of video to be able to show that to you to put it in offer. I mean, you've got to be able to jump the gun very quickly in this market.
I know, it's crazy. I have some buyers that, took a break over the holidays, want to get back out there. And, as soon as I'm seeing these homes being posted on social media or in the coming soon status on the MLS, which is such a huge feature these days. I mean, it's just, we're heading out there tomorrow to look at them. So, yeah. So, and also speaking of that, we were talking about how, you were saying that in 2020, while inventory is low, a lot of those homes are quickly going out the market. So let's talk about 2021 for that aspect. Housing continues to be strong, correct?
It does. And for that, I'm going to share my screen really quickly.
Okay.
I want to show you. So Fannie Mae and Freddie Mac are two of the data aggregators. And of course, we know that they are also insurers for us as lenders. They're FHFA oversees Fannie Mae and Freddie Mac. So you'll hear about that with conventional loans. But they also put out metrics as well as MBA and NAR in projecting what is 2021 going to look like. And so when I look at these numbers, this is interesting because every single month they forecast monthly, and they will continue to do this. So they forecast in October, November, December, and January. They kept increasing their forecasted numbers for 2021 because the closer we got to 2021, they realized this is not slowing down. The interest rates are continuing to stay low, and our volume is continuing to pick up. So in fact, this is purchase volume, refinance volume, home sales. Look at this. They continue to raise the bar on how many home sales we're going to see. And this is existing home sales, and this is housing starts. They expect that to continue now, not as much because you have this restriction on builders, and hopefully we'll see more existing home sales come on the market. Fannie Mae projects that the interest rates are still going to be low, below 3%. Now, mind you, Fannie Mae is the lowest of all of the forecasters, the major forecasters. The highest is MBA, NAR's right behind them. So I don't want to say that this is going to be the expected rate. This is a forecaster's interpretation of where they think the rates are going to go, but they think that the rates are going to stay low. Freddie Mac, just to show the other side of this, the second half, they expect the purchase volume to continue to be strong. They expect overall home sales to be 6.5. I mean, we broke above 6 million this past year in 2020, and we had record number of sales nationwide, and we certainly did in the DMAR 11 county area. And they expect rates to be a little bit higher at 2.9%.
Wow. Wow, such great information. Nicole, thank you so much for that information. And for anyone who wants to continue the conversation with Nicole, talking about lending, refinancing, mortgage rates, first-time home buyers, you name it, Nicole is your girl. Her team is amazing. And I will have Nicole's information down below so you can give her a call, shoot her an email. And if anyone wants to go check out that low inventory, I know it's hot inventory right now, but if you want to have any questions about the real estate market, want to talk numbers, want to talk locations, want to talk housing prices, give me a call. My number is down below. Nicole, I can't wait to see you next month. We'll have a lot to talk about with our first anniversary of COVID. I hate to say it, but it's coming up. So until then, I wish you all the best, and we'll see you next month.
All right. Bye, Marybeth.